Hello, Brian Linchey here with your quick mortgage and housing market update. If you're thinking about buying a home or refinancing, this week brought some mixed news. Rates moved up a bit, but there are some hopeful developments on the horizon. According to the latest MBA data, mortgage rates rose from 6.56% to 6.65% last week. That jump caused refinance applications to fall sharply, down 18% for the week. Purchase applications stayed relatively flat, but they're still running about 5% higher than this time last year. So while things cooled off a little with higher rates, buyer demand hasn't disappeared. The good news? Oil prices have dropped below $90 a barrel, and there's growing optimism about a potential peace deal between the U.S. and Iran. If that happens, Iran could quickly restore oil traffic through the Strait of Hormuz, which would help keep energy prices lower. Lower oil prices are great for inflation, and right now the 10-year Treasury yield has already broken below 4.50%. That's important because mortgage rates tend to follow these yields. Tomorrow we get the Fed's favorite inflation read, the PCE report. The market expects headline inflation to rise to around 3.8%. If it comes in cooler than expected, especially with oil prices dropping, that could give bond yields and mortgage rates some breathing room. Here's what this means for you. For homebuyers, inventory is still challenging in many areas, but purchase activity is holding up. If rates dip back toward the mid-sixes or lower on good economic news, it could create a nice window. Don't wait for the perfect rate. The right home at the right price still matters most. For homeowners, refinances slowed this week, but they're still up 19% from last year. If you have a rate above 7%, it's worth getting a quote to see if it makes sense. Overall, the market is watching these geopolitical and inflation developments closely. Lower energy costs could be a real tailwind for mortgage rates in the coming weeks. I'm here to help you understand your real options in today's market. Feel free to reach out anytime with questions.